BlackRock highlights Bitcoin's unique properties as approved IBIT options could cement risk-off status. BlackRock's latest report shows that Bitcoin has a very low correlation to U.S. equities on a trailing 6-month basis. Bitcoin is up 22% since the yen carry trade unwind on August 5, while gold and the S&P 500 are up around 11%. Over 65% of the circulating Bitcoin supply has remained unmoved. For over a year, almost all holders are in profit if they held for 3 years, while they are all in profit if they held for at least 5 years unchained. BlackRock released a report last week titled Bitcoin as a Unique Diversifier. The investment giant identified 4 key points from the report. First, how to analyze Bitcoin BTC in relation to traditional financial assets due to its fundamental properties, such as not having a quarterly earnings report or a CEO. Second, Bitcoin's high volatility can be perceived as a risky asset, which contributes to the discussion that whether it is a risk-on or risk-off asset. The token could be considered a flight to safety option because it is scarce, non-sovereign, and decentralized. Lastly, BlackRock pointed out that the long-term adoption of Bitcoin may come from global instability. Bitcoin's realized volatility trends downwards. Bitcoin's realized volatility continues to trend downwards over time, indicating increased stability. In the early years of Bitcoin, its realized volatility used to trade over, however, as the asset matured, so did the volatility. Since 2018, realized volatility has not exceeded 100% and is currently at 50%. As realized volatility decreases and liquidity increases through financial instruments such as the spot and futures market, this may bring in more sophisticated investors such as options traders. This seems to be on the horizon with the U.S. Securities and Exchange Commission's SEC approval of physically settled options tied to BlackRock's spot Bitcoin ETF. Risk on or risk off? BlackRock also asked the question, is Bitcoin risk on or risk off? While short-term trading may suggest that Bitcoin behaves like a risk-on, the data reveals a different narrative over a longer time horizon. According to data from Bitcoin custody service Unchained, almost all holders are in profit if they held for just 3 years. All Bitcoin holders in this class are in profit if they held for at least 5 years. We can see this type of mentality on-chain among investors, where over 65% of the circulating Bitcoin supply has remained unmoved for more than 1 year, according to Glassnode. This trend suggests that many investors tend to hold Bitcoin because they believe in its store of value narrative and view it as a risk-off asset, even though Bitcoin has faced multiple corrections in low historical correlation with U.S. equities. BlackRock also showed that Bitcoin has a very low correlation to U.S. equities. A graph shows the trailing 6-month S&P 500 correlation with Bitcoin. The average correlation is 0.2%. 2015. Sometimes assets will trade near one-to-one with one another due to external macro factors, most likely in risk-off or liquidity events. The report notes, these episodes have been short-term in nature and have failed to produce a clear long-term statistically significant correlation relationships. Bitcoin outperforms other risk-on assets after major events, continuing with the theme of having a long-term time preference. BlackRock noted that Bitcoin tends to outperform other risk-on assets after 60 days following a major geopolitical event. The U.S.-Iran escalation in 2020 saw Bitcoin return 20% after 60 days, outperforming gold and S&P 500. This was also the case for COVID-19, the 2020 U.S. election challenges, the Russian invasion of Ukraine, the U.S. regional banking crisis, and most recently, the yen carry trade unwind on August 5. During the recent yen carry trade unwind on August 5, which was now 53 days ago, major assets experienced declines on the day. However, Bitcoin has risen by 22% since then, with gold and the S&P 500 up roughly 11%.